Hello guys, it's Max here from Daily Market Movements and welcome to another Market Outlook video where today we're going to be discussing the trading week running from the 10th all the way through to the 14th of July. Now let's start with economic data. We actually have a rather muted week. However, we do have a bit of data that's going to be released on Wednesday and on Thursday. Starting off on Wednesday, we have the CPI reading. In my own humble opinion, this is going to be the most important data released this week. As we all know, investors as well as the Federal Reserve are heavily focused on inflation. They've been trying to bring inflation down to their target of 2%. You know, it was only 9 months ago when inflation was running all the way up at 9%. So they've been very successful in bringing inflation down, but they still want to see it hit their target of 2%. So I'm looking for inflation to have a free handle for the first time in over 12 months as we move through to the trading session on Wednesday. And then moving on to Thursday, we have the jobless claims number. That's going to be very important. Of course, that's off the back of the non-farm payrolls figure that we got last Friday. And it was the first negative surprise in over 15 months. And again, you know, this is a key piece of data that the Fed is heavily focused on because the Fed believe that cooling the labor market will help with their fight against inflation. So I'm going to be heavily focused on that jobless claims number that we get on Thursday. And then also on Thursday, we have the PPI data, which is also another inflation reading. So that's going to be very important as well. But just looking at the broader market as a whole, especially after last week was quite muted. We pretty much ended the week where we started off, especially with the S&P 500 and the NASDAQ. I think the Dow Jones 30 ended slightly down for the trading week. But looking at the S&P 500 on your screens, I have put up a chart, and this is an Elliott wave structured pattern, which I believe we're trading within at this moment in time. This is a 2-hour time frame, and I think that it's possible for us to go and trade up towards 4,500, maybe even 4,550 to complete this 5-wave Elliott wave pattern. I believe that we are currently in the 4th to 5th innings of this structure. So I am looking for some further strength as we work our way through the next week or so. Very similar here in the NASDAQ 100. I do believe that we're trading within the exact same pattern that we find ourselves trading in over on the S&P 500. I still believe that we are within the 4th to 5th innings. And for the NASDAQ 100, I'm looking for a target price of 15,400. That also represents where the 0.786 fib area is from the peak to trough from the 2022 bear market. Now, looking at the Dow Jones 30, we continue to see support here at the 50-day EMA. This is an area where buyers continue to step back in and protect the Dow Jones 30. So, you know, going into this week, I want to see more evidence of the bull stepping in and protecting the market. I think to conclude with today's video, it's very important that you understand that from a seasonal perspective, we are now entering into quite a weak period. You know, pretty much from the 21st of July all the way through to October, you do tend to see some momentum towards the downside. And this is a result of low liquidity being invested in the markets, as many traders do take a holiday during the next 3 months. So we are likely to see low liquidity, which of course results in low volatility. And when you have low volatility in the market, you do tend to see a very slow move towards the downside in the broader markets, which does actually set up for some pretty good range trading. If you are witnessing large profits in your trading accounts at this moment in time, you know, perhaps if you've invested in stocks like Nvidia, in Meta, Apple, Microsoft, for example, it may be smart to trim some of these positions to raise some cash, because if we go into the month of August, for example, and we do start to see some downturn in the market, whether it be a 5 or 7% move towards the downside, it could be a fantastic opportunity to be investing that cash that you have reserved and, you know, buy the dip in some of these high-flying stocks. That's it for today's video, guys. Don't forget you can join my free trading signal group by simply scanning this QR code on your screen. It will take you to my website where you can sign up. It takes 10 seconds and it's completely free of charge. And of course, you will also gain access to my free daily market research that I post there every single morning before the market opens. Thank you very much for watching today's video. Let's go make some money.